All right, so today we're doing a deep dive into this company called Nitiraj Engineers. You've probably seen their stuff everywhere.
Oh, yeah, for sure.
The scales at the grocery store, those currency counting machines
Yeah.
at the bank. But they also make ferrometers, and
Really?
they're even getting into drones, believe it or not. So to kind of unpack all this, we've got their Q2, FY25 reports. We've got a recent auditor's review, and we even have some questions from a recent investor presentation. So are you ready to try to make sense of this Nitiraj story?
I am. Yeah, absolutely. Let's do it. One of the things that jumps out immediately is that they went from a loss of 164.81 lakh
Wow.
in Q2 of last year to a profit of 2.02 lakh this year. So that's a pretty big swing, going from the red to the black. And I think, that's a pretty significant development.
Yeah, it's a pretty impressive turnaround.
Yeah, for sure.
And it really kind of makes you curious to look a little deeper. But one thing that kind of strikes me is that when you look at the first half of FY25, overall, they're still showing a loss, although it's much smaller than last year.
Hmm.
So it kind of makes you wonder if there's a seasonal element to their business.
Yeah, maybe so. That's definitely something to think about, right?
Yeah.
Is there some kind of seasonality that we need to be aware of,
Yeah.
as we're looking at this? Okay, so next let's look at revenue. So revenue for Q2 FY25 was 12,255.91 lakh. That's lower than the same quarter last year, but significantly higher than Q1 FY25. So it's kind of like this.
So they're all over the place. It's like a financial roller coaster.
Right, and that really begs the question of what happened between Q1 and Q2.
Yeah, what explains that jump?
Right. Was there a big contract they got? Did they launch a new product? We might get some answers in the report, but we really want to see what kind of caused that jump. But here's something interesting. The gross profit margins are up year over year,
Oh, okay.
but down from Q1.
So they're making more profit on each rupee of sales than they were last year,
That's right.
but not as much as they were in the previous quarter.
Correct.
Yeah.
Exactly. So that kind of points to them getting more efficient with their operations.
Potentially,
Yeah, maybe they streamline their production, maybe they cut some costs, or maybe even got better prices from their suppliers.
Yeah.
So we really need to kind of see, what happened there. Now let's talk segments. So the only reportable segment that is mentioned is industrial electrical equipment.
Wait, hold on. What about the drones?
Yeah.
What about this exciting new venture?
Yeah.
Are they not talking about that yet?
Yeah, it could be. It could be that it's just not making enough money yet to to kind of break out.
Gotcha.
Right? But it does make you wonder about the industrial electrical equipment. What exactly is that? What are the products there? Are they focusing on a particular niche, Or what's their competitive advantage in that segment? We don't really get a lot of details on that.
Yeah, it feels like we're missing some pieces of the puzzle here.
A little bit, yeah. And unfortunately, we don't have a lot of detail about the market trends in general and the competitive landscape that Nitiraj is operating in.
Yeah, that would be helpful.
Yeah, yeah. I mean, it would be great to know, what's the overall demand for this kind of stuff? Who are the big players? Is there any new technology coming out that could disrupt things? We just don't have that information.
Yeah. So we're kind of left with some questions about the big picture.
Yeah.
But we can look at, what they're doing internally.
Right.
And one thing that stands out is that it looks like they've done some serious cost cutting. Their operational costs are down from Q2 last year.
Yeah,
And
definitely.
that probably helped with that improved profit margin, right?
That's right. But the question is, was it intentional? Was this a specific strategy
Yeah.
to cut costs, or was it just a side effect of being more efficient?
Yeah.
Right. So we need to kind of look at the specific expenses and see if there's a pattern there.
Right. So, we see that they've been tightening their belts.
Yeah.
But the question is it a sustainable kind of belt tightening, or is it just a temporary fix?
Exactly. Exactly. And, apart from the drones, are there any other, big initiatives or
Yeah.
partnerships on the horizon that we need to be aware of?
That's interesting that you bring that up, because there's no mention of anything specific in the material that we have. But I did notice something interesting in the cash flow statement. There's this huge increase in proceeds from selling investments.
Oh, okay.
They went from, 11,133.15 lakh in March to just 90.80 lakh in September.
Huh. So they're really selling off a lot of their investments.
Yeah, they're cleaning house.
Yeah.
And it makes you wonder, why? What's the thinking behind that? Are they trying to focus on something new? Are they just divesting? It just raises a lot of questions.
It does, doesn't it? Yeah. I mean, and unfortunately, we don't have any guidance from management about what their future plans are.
Yeah, no crystal ball to tell us what they're thinking.
Oh, right.
All right. So, yeah, this is all very interesting, but what about the shareholders? What's the
Uh,
market thinking about all of this?
yeah, you would think.
Unfortunately, again, we don't have any information on the stock price or investor sentiment.
Right, right. I mean, but it seems like their Q2 performance and the efforts that they're making to improve profitability could be positive signs for investors.
Potentially, yeah.
Yeah. But one thing that we haven't talked about at all is sustainability. What about ESG?
That's a good point. It seems like every company these days is talking about that, and it's kind of surprising that we don't have any information on what they're doing.
Yeah, I agree. I think it would be really interesting to see, if Nitiraj has any kind of public commitment to sustainability and how that fits into their overall strategy.
Yeah, so we've got a company here that's kind of all over the place financially.
Yeah.
They're getting into drones,
Hmm.
they're selling off investments. There's a lot going on.
It's a very interesting company.
Yeah, there's a lot to unpack here.
Yeah.
So in part two, we're going to get into the nitty-gritty. We're going to look at the balance sheet,
Right.
the cash flow statement.
That's good.
We're going to try to really, get under the hood and see what's going on. All right, so we're back. And we're ready to really get our hands dirty with Nitiraj Engineers.
Yeah.
We spent the last part looking at, the overall performance, the drones, investments, all the good stuff. But now I think it's time to crack open the balance sheet, see what we can find.
Yeah, I'm excited to dig into this. The balance sheet is really that snapshot of their financial health, right?
Right.
At a specific point in time. It tells us what they own,
Yeah.
those assets, what they owe, the liabilities, and then, of course, what's left over for the shareholders, the equity.
Right, right. So let's start with their long-term assets, the things that they're going to be using for more than a year. And we see a big chunk of their assets is tied up in property, plant, and equipment. 3,081.94 lakh as of September 30th. And that's actually increased since March.
Yeah, yeah. So they're putting money into things like buildings, machinery, vehicles, that sort of thing. So that could mean, they're expanding their capacity, they're upgrading facilities, or maybe even getting ready for this drone business to really, really take off.
Right, right. It's like they're building for the future.
Yeah.
But remember those investments that they were selling? We saw some big numbers in the cash flow statement.
Right.
Does the balance sheet shed any light on that?
Oh, yeah, for sure. So if you look at the line for investments, it's down quite a bit from, 11,133.15 lakh in March to just 90.80 lakh in September.
Wow. Okay.
So they're definitely cashing out of some of those investments.
So what do you think is going on there? Are they consolidating, freeing up capital, or maybe a little bit of both?
Yeah, it's hard to say for sure without more information, but if we kind of connect the dots back to what we saw earlier, it's possible that they're freeing up some of this cash to fund these investments in property, plant, and equipment, right?
Yeah.
Maybe they're betting big on their existing business, or they're getting ready for this big push in the drone market.
Right, right. So their assets are telling a story of growth.
Yeah.
And kind of strategic shifts.
For sure.
But what about the other side of the balance sheet, the liabilities? What do they owe?
Yeah, that's a good question. So one thing that pops out is that their deferred tax liability has completely disappeared since March.
Oh, interesting.
So that suggests that maybe they, resolved some tax issue or benefited from some changes in tax regulations.
Right.
But either way, that's a positive for their financial health.
Yeah, it's like they cleared a hurdle. All right. So let's look at their current assets, the things they can turn into cash pretty quickly.
Yeah.
And their inventory stands at 2,117.73 lakh as of September 30th. Now, that's a huge jump.
That's a big jump. Yeah, remember we talked earlier about potential supply chain issues. So
Yeah.
it's possible they're stocking up on on raw materials to, kind of get ahead of that.
Okay.
Or maybe they're just expecting a surge in demand and they want to make sure that they've got, enough product ready to meet that.
Right, right. So it could be caution, it could be ambition,
Yeah,
it could be both.
a little both.
All right, so let's look at the other side of that. The current liabilities, things they need to pay off in the near future.
Yeah.
And their trade payables. The money they owe to suppliers has actually decreased a little bit.
Yeah, that's usually a good sign.
Okay.
It probably means they're managing their cash flow well, they're paying their bills on time,
Right.
which, keeps the suppliers happy.
Keep those relationships strong. But I did notice that their other financial liabilities have gone up.
Yeah, that's a good point. So that could be, short-term loans, lines of credit, other kinds of debt that they've taken on to manage their cash flow or to, fund operations. We really need more detail to know for sure.
Right, right. So the balance sheet's giving us a little bit of a peek into their strategy.
Yeah.
But let's not forget the cash flow statement.
Right. That's where we see the actual movement of the money,
Right.
Coming in and going out of the company. Think of it like their financial diary.
Okay.
It tracks those inflows and outflows, from their operations, their investments, their financing activities. It really shows us where the money's coming from and where it's going.
Right. So looking at the first half of FY25, their net cash flow from operating activities is negative.
Right.
Which sounds bad.
Well, it's not necessarily a bad thing, right? I mean, you really have to understand what's driving that.
Okay.
And in this case, it's primarily those changes in their working capital.
Okay.
We talked about how they've really increased their inventories.
Right.
And they've also paid down some of their trade payables.
Right. Which explains why that number went down on the balance sheet.
Exactly. So they're spending cash to, to stock up and to keep those supplier relationships strong.
Right. But they also had this huge inflow of cash from their investment activities. That euro 2,125 lakh from selling off investments, that really helped their cash position.
Yeah, absolutely. And it's interesting to see that they've actually used some of that cash to invest in property, plant, and equipment, right?
Yeah.
We saw that on the balance sheet earlier.
Right.
They've put 530.90 lakh into those long-term assets.
So they're divesting from certain investments,
Yeah.
but reinvesting in their core business operations.
Exactly.
It's like a strategic shift.
Yeah.
Now, before we move on, we have to talk about the auditor's report, right? That's our stamp of approval.
Oh, absolutely. The auditor's report gives us that independent assessment of their financial statements. And in this case, they've given a clean opinion, meaning they didn't find any, material misstatements or any red flags.
Okay, good.
Yeah.
That's reassuring. So we've explored the balance sheet, the cash flow statement. We've got the auditor's green light. What's next on this journey with Nitiraj?
Well, I think we've gathered all the pieces of the puzzle, right? So in the final part, we're going to try to put it all together, analyze the key takeaways, really assess their overall financial health, and then leave you with some things to think about as we move forward.
All right, so we've really gotten into the weeds with Nitiraj Engineers over these last two parts. We've looked at the profit trends, the revenue, the move into drones, those investment decisions, even cracked open the balance sheet and cash flow statement. So what does it all mean? What's the story that Nitiraj is telling us?
If I had to sum it up in a few words, I'd say resilience, adaptation, and a willingness to take calculated risks.
I like that. It's not just the numbers.
Right.
It's the thinking behind them. They've come back from some tough times. They're going into new markets, and they're making these bold moves to really set themselves up for the future.
Exactly, yeah. And I think what's impressive is that they're not afraid to shake things up, selling off a chunk of their investment portfolio. That shows that they're willing to make some tough choices and move resources to areas where they think they can grow.
Yeah, it's like they're playing a game of chess, but with their financing.
Right.
And speaking of growth, those investments in property, plant, and equipment. I mean, that sounds like they're getting ready for something big.
Yeah. I think, if you combine those investments with that move into drones, it really paints a picture of a company that's not just sitting still. They're looking for those new opportunities.
Yeah.
And they're putting their money where their mouth is, so to speak.
Right. But of course, there are always risks.
Of course. Yeah.
I mean, the market for this kind of stuff is competitive.
Yeah.
There's no guarantee that the drones will be successful, and we still don't really have a good understanding of, the overall industry and the challenges that they might be facing.
Right. And we can't forget that we didn't really get any information about, their sustainability efforts, the ESG side of things.
Yeah, that's a big one these days, and it'd be interesting to see how they approach that going forward.
For sure. Yeah. But, despite all that uncertainty, I think there's reason to be optimistic, right? I mean,
Yeah.
they've shown that they can weather the storm financially. They're putting money into innovation, and they're making those strategic moves to grow.
So the question is, can they keep this momentum going? Can they turn these bets into actual success?
Right. Is this going to be a breakout year for them?
Yeah.
I wish I had a crystal ball, but
Yeah.
But they've definitely set themselves up well. They've shown that they can adapt, that they're strategic, and they're not afraid of change. So now it's all about execution.
Yeah, and that's the exciting part. We get to see how it all plays out.
Exactly.
Will they take off with the drones? Will the investments pay off? Will they become, you know, uh, a leader in sustainability? We'll just have to wait and see.
Yeah, that's what makes, following these companies so interesting, right? It's like a real life business drama. It's got twists and turns and hopefully a happy ending.
So what are your final thoughts for our listeners? What should they be watching for as Nitiraj's story unfolds?
Yeah, I'd say keep an eye on their future financial reports, See if they start breaking out the drone business separately. Look for any announcements about partnerships or product launches, any big contracts they win, and pay attention to what they're doing on the sustainability front, or maybe what they're not doing.
Great advice. So we've given you the tools, the insights to understand Nitiraj's story up to this point.
That's right.
Now it's up to you to keep digging.
And remember, the most interesting stuff is often hidden just below the surface. So, stay curious, keep exploring, and who knows, you might just uncover the next big thing.
And that's it for our deep dive into the world of Nitiraj engineers.
It's been a pleasure.
We hope you enjoyed the journey. Until next time, keep diving deep.
And keep learning.
We'll see you then.